So the Fed decided to pause interest rates, and I want you to understand what you can look for in their forecast and what we're working towards. Hi, my name is Jonathan. I want to help you build your wealth, and personal finance is a lot about the decisions you make every day, and I want to help you make better decisions. Follow me for more. So, if you want to understand, we've been fighting inflation really for 2.5 years. Can you believe 2.5 years? And up until this year has really gotten to the entrenched. Before it was so high, you were just boggled down and confused about everything that was going on with your gas prices, groceries, housing was out of control. You're getting lease renewals for $400 increases. But now things have started to moderate, and now you're in a time where you're seeing more layoffs. You're seeing from a consumer spending, 92% of people are actually being a little bit more cautious with their spending, and they're trying to understand what decisions can they make, and then how long is this going to last as far as the fight? Because you've seen banks fail, you've seen layoffs, you've seen many things happening in the economy while it's harder to get credit at the same time. So how do you actually make a plan, and what decision can you make? Well, part of that is understanding what can you expect, and that's where these Fed meetings come into play. See, the Fed, Jerome Powell actually came out and he explained the reason for pausing on interest rates, saying that they're seeing the signs in all the sectors. The fact is they need more time to understand, should they do another rate hike? Do they need to pause? Or how much longer will it take? They updated the forecast of what they expect to happen this year and the next year, and even the year after that, as far as what they expect. Because remember, the whole purpose of this aggressive rate hike was to get down inflation to 2% target over time. So this year they're expecting unemployment right now it's at 3.7% based off the last update for June. But they expect for it to get to 4.1% by the end of the year. So 3.7, that means more jobs may be lost or just more jobs taken out of the system, because again, they're still grappling with this whole, there's about 2 jobs estimated for every 1 person looking. What the other thing that happened is, while they were, one of the ideas or one of the sectors that had been troubling is that the ages of 25 to 54 had a low participation rate in the market. So now there are actually more people coming in that age group that's looking and actually working in the workforce, which is helping unemployment numbers. The next year, so this year they're expecting 4.1%. Next year they're expecting 4.5% unemployment rate. Again, that could be just the fact of taking more jobs out that are posted. Now, to inflation. Right now, we're sitting at about 4% core-ish. By the end of the year, they expect inflation, total overall inflation, to get to 3.2%. Next year, 2.5%. The year after, 2.1%. And the reason why this is important is because what you can understand is that if you're looking for a job and you've been laid off, you can start to see that, again, we're closer to the end, but likely next year is where you'll start to see the beginning stages of hiring, and then the year after, a more normalized labor force market. Interesting thing about this is that wages rates that people for labor have been negotiating haven't taken as much of a toll. And while a lot of the signs haven't been indicative of what they wanted to expect, the fact is this is a different circumstance than others that have happened before. The point of all this is that there's never been a better time to actually really think about why you don't have an emergency fund right now. If you don't, I can help you develop that, whether you want to talk for free or whether you want to take a more strategic approach. But the fact is, you need cash to help you weather some of this storm. And maybe you're sitting here and wondering like, hey, I don't even have a job right now. How can I think about saving? Well, let's talk about some of the options that could be available to you just with your current skill set. These are things that oftentimes you can't see and understand how to use your skill set and what does that mean to extract cash from your skill set out of the economy without getting some direction. And that's why I turned on my financial coaching a little bit more to help assist in that fashion. The fact of the matter is, I want to help you succeed. And I know without knowing your options, it's hard for you to make a good decision. Again, right now, you should be very cautious yet optimistic that you're closer to the end and that things will get better. The fact is, it still will be tough because what we don't know is these are projections and we don't know what else may happen into the economy between now and the end of the year that can throw off these projections. But for right now, you can say, hey, the job's not finished, it's looking better, and you can start looking at ways of, and continue looking at ways of, how can I make money to and manage my money well to weather this storm. Hi, my name is Jonathan. I want to help you build your wealth, and weathering this inflation storm, you might need some help. Follow me for more.